Over to Geneva now, where Ryan Chilcote has been speaking to some of the best minds in private equity and their outlook for the industry and also the world. And he is standing by with a special guest. Ryan.
Hi, Betty. Well, we're going to talk about China right now. We have with us Yichen Zhang. He is the CEO of C.I.T.I.C Capital. C.I.T.I.C, of course, China's largest financial company. You've got $2.3 billion in under management. You're a big player in private equity in China. How much of it have you got invested?
We added the $2.3 billion. We invested about, at this point, about half of that money.
About half the money. What's your average deal size?
For the private equity side, the average deal size is about $100 million. For our real estate fund and all that, it varies.
What's your argument for private equity putting money in China now? The economy's slowing down. Why now?
China, in terms of overall economic growth, we all know China is at the beginning of the urbanization process. It's at the middle stage of the industrialization process. So the current growth rate will continue probably easily for another 15, 20 years until the country is fully industrialized and urbanized. So in that process, obviously, you're going to have a lot of opportunities to make money. At the same time, as a percentage of GDP, the Chinese private equity industry is very small. In the U.S., I think at its peak, probably in 2007, the PE industry accounts for roughly about 5% of the GDP. In China, it's probably 0.5% of the Chinese GDP. So there's a lot of room for private equity capital to be deployed.
Tell me your investment strategy.
Our investment strategy is different than most of the China funds, in that most of the China funds in China tend to focus on growth capital investment opportunities, where they take minority stakes in pre-IPO type of companies and expect the capital markets to take them out in a couple of years. Those games were very good, particularly during the good years from 2005 to 2007. But now that game obviously is suffering because capital market is not nearly as buoyant. But for us, we tend to focus on control-oriented deals. We're actually probably one of the only control-oriented private equity firm in China.
Let's do rapid-fire question and answer. We don't have very much time. Give us an example. We don't talk to you very often of one or two deals that you've just done that we don't know about yet.
To be honest, over the last year or so, we closed a couple of deals in the consumer sector. We have just a couple months ago, we closed a deal which in a candy company, which is the leading candy confectionery in China. It's called White Rabbit. It's a household name. And we are in the process of closing on an infant milk formula business. We've been watching that business for a while. Obviously, there was a scandal, industry-wide scandal, involving melamine, and we have watched the business recover.
So. We only got 10, 15 more seconds. Where are you getting your money? Everybody I talk to here says capital's tight. Are you actually getting any money? I just got about 10 seconds.
Yes, we are getting. We are raising our second fund, $750 million, but we actually did our first closing in February with about 500. I think people are still interested in China, particularly on a controlled strategy.
So the money's coming in.
Yes.
Well, that's a very different perspective on the world of private equity that we just heard from Yichen Zhang. Again, he is the chief executive of C.I.T.I.C Capital, one of the arms of China's largest financial company. Betty, back to you.
Okay, Ryan, thanks so much.